Joining us for more is Nancy Lazar. She's the chief global economist at Piper Sandler. Nancy, welcome. And, it's a big issue to delve into. Could you just set the stage by telling us what you think of the data this morning? Poor sentiment, high inflation expectations, and that's the backdrop against which all of this is happening.
So, to be sure, the economy is going through a little bit of a soft patch. Is it simply due to uncertainty, or is it also due to the extreme weather that we've had? Is it in part related to what's going on in California, unfortunately, with the very, very horrific fires? And spending there near term is being held down. Is it also potentially related? Consumer spending in the fourth quarter was very strong. Retail sales in particular rose 7% quarter to quarter annualized run rate. So was there pulled forward into the fourth quarter? And we're just seeing a little bit of that here in the first quarter. And I'll add one more. Easter's very late this year. It's in late April versus last year. It was in March. So some of this is due to be sure, uncertainty around tariffs. Some of this is due to high price levels, but there are other factors. And it's a soft patch. We don't think it's economy's at risk of dipping into a recession.
So, Nancy, the problem, I think, for Doge is that the more they do right off the bat, the less they're hoping to have to do in the long run. I mean, that's my opinion, not theirs. But in other words, you want to get bond yields down. You want to get spending on a better trajectory. You come in with kind of a shock and awe approach. And yet they have inflation expectations going up, and the 10-year better today. But I don't think we want the 10-year going down because it looks like, the economy is weakening or the consumer is.
So let's put Doge in perspective. And in order to do that, you really need to look at what happened over the past 4 years. First, regulatory costs soared under the Biden administration. Those have a huge impact on inflation. If companies' costs go up, they're obviously going to try to pass that through to the consumer. We've never seen this kind of surge in regulatory costs we saw over the past 4 years in history. A huge shift up from Trump 45. There's big efforts, obviously, happening right now to reduce that regulatory cost. Second, government spending soared, had the biggest increase in a non-war environment, really on record. Back, you had some similar increase during the Vietnam War. And also entitlement programs in the late 1960s, 67, 68, 69. That was a very negative precursor to the economic inflation backdrop that we have. So along with regulatory costs contributing to inflation, the massive surge in federal outlays, which were up 10% in fiscal year 2024, are so far in the first 4 months of this fiscal year up almost as much, is one of the single biggest contributors to inflation. And we don't think that's appreciated because, quite frankly, nobody on Wall Street remembers the late 1960s. I've had to go back and study it and see the bad path that's set for the 1970s. So absolutely, you get an outright decline in government spending, which is highly debated on whether or not we're going to get that.
Right.
But if we see chipping away at federal outlays, yes, we think that, along with less regulation, will improve productivity, help to put downward pressure on price, and quite frankly, end this horrible bifurcation that we've seen between high-income consumers and lower-income consumers.
Steve?
I'm just a little confused that Nancy is talking so logically now. And it does not appear to me, Nancy, that there is as much logic behind what you're talking about as is going on in the process of Doge right now. For example, you talk about the idea of the regulations that were passed in the Biden administration. But it's unclear to me that there's a connection between the people being laid off in the federal government and the regulations passed by the Biden administration. Maybe there's some, but you hear people being laid off, for example, running nuclear related activities, people doing a variety of things that have nothing to do with the increase in regulation. So I'm a little confused how you can even think about making a forecast based upon, I don't know how much Doge is cutting. It seems to me not that much transparency about it. That causes me some concern to say, yeah, all the things you're talking about, Nancy, make a lot of sense, and bringing down government spending is probably a good thing. But it feels and looks like there are people being laid off throughout the federal government that might be involved in providing vital services of the federal government. So I'm a little bit skeptical right now of saying that there's a forecast you can make about an intelligent outcome from all of this.